Welcome to week 29, Trading Forex calendar, having a look at the CFTC data. It looks like that dollar has been swinging back and forward, so let me actually show you the euro first. So the week before that, euro trimmed their long positions and they added them back on, which kind of showed a back and forward pattern for the dollar positioning. That's sort of is back at where it was earlier or later in June. One of the reasons was that the end of June there was a little bit of selling going on as part of position squaring, and the incentives to hold long euro seem to be back on. All the other positions didn't have anything significant. Same thing with GBP. A bit of back and forward. The long's been coming on and coming off. The only thing that's been consistent with GBP was the shorts. They are continuously adding. Open interest still quite strong. Same with Euro. Open interest quite strong. AUD and NZD, they're both very neutral. Open positioning on both very low, and the long and short are at balance, as there is no incentives to add or short at this environment. And the other currencies didn't have anything significant either. So there's a lot of unreadiness to really get into the market by speculators, as there's no big incentives driving the market currently, and positioning are somewhat holding with a strong bullish bias for the euro. That is to the CFTC, nothing new gathered. Having a look at real yields to understand how and why gold's been trading the way it was over the past few weeks. It was quite bullish. I'm going to invert the chart. This is the 5-year real yield, very close to the 10-year as well. And if I invert the chart and compare it with gold, you'll be able to see the close correlation they hold. I'm going to change the color to gold. I've inverted the real yield chart, so as real yields keep going down and this chart going higher, gold tends to follow it as well. What we've seen last week is that we had not a long-term topping pattern, but we had some sort of a topping pattern going towards the end of the week, as real yields found the bottom. And whether this is an absolute bottom or not, it is hard to tell. There was nothing new really happening to give us the indication that such a scenario is true. But what it seems to be is that investors are a little bit easier on buying inflation protected bonds, and some are selling ahead of the 15th of July, which would be the last day where you can do your tax returns, which also means that possibly investors are raising cash, squaring some books as well ahead of that date. That could be possibly the reason for gold to found a short-term top around 1810, 1815. So I'll be expecting this to play around in this range, possibly even drop lower towards 1780 for gold in the coming week as the positioning squaring continues. Last time we have a look at the inflation expectation. Now there's a couple of things about inflation expectations. While inflation expectation itself shows investors' expectation of inflation down the line, one of the other reasons they're continuously bidding up this market and buying inflation protective bonds is the reason there's nowhere else to invest money, or there's nowhere safe to invest money, and investors and pension funds really like buying inflation protective bonds. That's one of the reasons why this is keep climbing. Another one of the other reasons was gold was climbing with it, and it created a strong demand for inflation expectation as well. Now usually I like to overlay this chart with one of the commodity currencies like Australian dollar or Canadian dollar, as they are really highly correlated, and as inflation expectation chart has been rounding off, and it has been doing this for pretty much since March, where every time I reached these higher levels, prices kept climbing down. And we can see this on Australian dollar as well, where Australian dollar found really strong resistance to try to climb any further. And before we want to see a breakout either way, possibly this inflation expectation will need to find a stronger breakout either way. So we are at a decision point, again going to the 15th of July, there's lots of position squaring, and I'm expecting a little bit more chop rather than a decisive move either way. So we covered real yields, we covered inflation protected bonds. Quick look at what's happening with Euro bonds next week. So in week 29 we will have Italian bonds insurance. We will also have on Wednesday German bonds. Now this is the 10-year yield that will be auctioned off for 4 billion. What you tend to see is with the Euro JPY is more or less always before a German bond offering is due, you find Euro JPY sort of climbing, and then the day after immediately it falls off. So if I were to show you the Euro JPY chart, I have it open here actually. Last time we had, for instance, week 27, we had German bonds on the 30th. I would expect next day probably would have sold off. So on the 30th of June, we had this green candle, and the following day, Euro JPY found the leg lower. That doesn't mean it starts a trend, but at least we're pretty certain there's a bearish day following that day. Or on week 28, we had German bond offering as well on the 7th of July, which was bearish on that day, slightly up climb, but did find another leg lower eventually. So I'm expecting that sort of movement again, where we have on the 15th of July we will have German bond offering. So I'm expecting on Thursday or Friday Euro JPY to possibly have another bearish day. That will play into the hand of that tax filing from the US as well, where we tend to see sort of risk taking off a little bit and dollar demand picking up. That could pressure Euro JPY lower as well. And bear in mind, incentives are very, very scarce coming into the July, and they'll probably continue to do so. One of the bigger events last week was probably the Chinese stock market rallying really, really strongly, and that caused a lot of inflows into the yuan, dollar selling. And in the past we've seen this happen before, where we get these strong Chinese stock market rallies and investors start piling in. I show on a weekly chart, makes a little bit more sense. So you see this strong weekly climb up, and I've done an overlay with the other charts, and especially the ones that dominated against the USD. What you find is that the other pairs don't actually climb with that market. What they do tend to do is, because of the way the hedgers are working and the way that market participants move money around, and market makers will need to keep prices stable, you find that there's a lot of chop happening when you see strong rallies in the Chinese stock market. So I'm expecting for Chinese stock market, usually these rallies will last about 4 to 6 weeks. So we already had 2 or 3 weeks of strong moves. I'm expecting this to continue somewhat into the start of August, where you find continuously chop in the FX market because of these inflows into the Chinese market before FX can take its own course. And that's important to understand, that we will be continuing a choppy market in the Forex for another few weeks at least. That means we won't be chasing any bigger swings, and the majority of the moves will be confined within 50 or 60 pips for the remainder of July. And it also means breakouts either on any of the currency pairs. Now I'm looking at Euro JPY, as that's of interest for the following week, any strong upside movements are likely to be faded. And same thing again, if you see huge breakout to the downside, they're unlikely to hold in this environment, as the FX market will be contained within a defined range, which also means we can put our efforts into more specific events trading through the week using the calendar, and not needing to chase any positions for longer periods, as July isn't the time to do that. So covered some of the basics. Having a quick look at the calendar, there's actually a lot happening next week, where we have a couple of volatility spikes. I will disregard Monday or Tuesday for the first 2 days, as there's not a lot happening. We have the ZW economic sentiment from Euro coming up in Germany. That is usually strongly watched, but ahead of what's happening in the week, it's not that important. We have core CPI on Tuesday as well, which we had a really bad reading, I believe, on Friday. It was on the PPI end. Yeah, so we had core PPI, which was really bad on Friday. And have a quick look at USD JPY, how that traded, to get a gauge what we can expect on Tuesday. So I think most yen pairs, USD JPY, I believe Euro JPY as well, took a beating. They tend to perform really badly when there's bad inflation readings. Focusing more on the coming week, again Tuesday and into Wednesday, the BOJ outlook, there's nothing new expected, so there's a lot to dislike on these yen pairs. There's a more downside bias going to next week. No new stimulus expected from the Bank of Japan. CPI readings coming dramatically lower than expected. And then we have the CAD monetary policy on the Wednesday. So Monday, Tuesday into Wednesday, if there's any stronger rallies in the yen pairs, I'm expecting them to fall off. Specifically Euro JPY, I'm looking to possibly sell it end of day Wednesday into Thursday and Friday, as that German bond offering will be the auction will be done by then, so they should just give us an opening. So end of 15th of July into the 16th of July, looking to sell Euro JPY again. We will have the BOC rate statement on the Wednesday. There's nothing to expect, however. I've checked the last 2 dates how Canadian dollar reacted. So the 15th of April, the 22nd of January, and both times USD CAD, well, Canadian dollar has been performing extremely bad. So the 15th of April was the meeting before. You saw a strong move up in the USD CAD, and the same thing was apparent on the 22nd of June as well. Bear in mind, 22nd of June was even before January, so it was even before the whole pandemic really started. We had a strong up move in there, so I'm not expecting to these lows to hold, and probably find ourselves closer to the top of the range by the end of the week and the Canadian dollar. So if there's any Canadian strength, really expect it to die down come Wednesday, as the BOC announcement is due. I'd be wary about Canadian dollar movements. We have an unemployment or employment change for Australian dollar, which is a strong mover. Unfortunately, at this point, we don't have a strong indication which will remove the Australian dollar, especially what is going on in China. Strong equity market pushing higher. It's distorting a lot of the look, so we'll be better off having a look after the event is due to get a better eye on where we headed. We have the ECB policy statement. Again, nothing new is expected. Everything that's been done and said has been already done. Important data we have is core retail sales in the United States, which does come hand in hand with the CPI reading as well. So good retail sales usually means we have good CPI, which means there should be a strong movement in the yen pairs. If the reading isn't as good as expected, we could possibly see Euro JPY even drop further, because that's probably one of the key pairs I'm watching next week to lose ground, especially going into Thursday and Friday, where we don't have a lot of data due either. I think we have better opportunities coming throughout the week if any stories evolve. Incentives are very thin right now as well, keeping in mind with what's happening in the hedging market with the FX. A lot of pairs are really range bound. Expecting a little bit of Euro JPY to drop off, possibly a little bit dollar strength as well. But we will have a better understanding once the week gets rolling too. Thank you very much.